Market to Market is everywhere you are. Subscribe to Market on YouTube, find us on the PBS video app to stream on demand, and add our 3 podcasts on your favorite podcasting app.
Welcome to the Friday, July 22nd, 2022 Market Plus. Here with more is Jeff French. Okay, back for more. Thanks for joining us, Jeff. We're going to start with some questions that we got on social media. So We'll start with Gary in Wisconsin. He says, will crashing wheat prices and dry summers deter wheat with double crop beans the government wanted to encourage just 2 months ago?
I think it's to a certain point. I mean, lower prices should ease a need for that. I don't think we'll see maybe less wheat acres. I mean, if you're kind of stuck into your rotation, I mean, I think you'll keep to it. But the short answer, yeah, I don't think you'll see a big expansion of double crop acres. But at the end of the day, we'll have to see what the prices are doing come here next spring. But the way we closed on Friday, it just wasn't good action. And, to this day right now, we have the funds long over probably 100,000 contracts of corn. They are short wheat. They're long probably about 80,000 contracts of beans. So it just feels right now, and this can change, but as of right now, it just feels that the funds do not want to own grains and they are trying to shed their long positions. I mean, this is the least long that they've been in the grains since October of 2020. So that's 2-year lows or almost 2-year lows from a long side. So it looks like, at least initially, lower prices are here to come.
Okay. So Carl in Elwood says, should we be Leo in Hazelwood, Iowa says, with grain exports from Ukraine resuming, and that was kind of the big story this week, that Russia and Ukraine came to an agreement to open up the ports. How will this impact wheat contracts in 23?
Well, they took a knee-jerk reaction. They were down. You look July of 23, Chicago wheat closed down right around 30, 35 cents, right around that $8 mark. So, it's 30%, 35% off the highs. But I mean, if you look at it historically, $8 wheat is still a moneymaker price. So, how's it going to affect exports? I mean, we've got a lot of things going against our wheat, and we said it in the main show. I mean, the main thing is the strong U.S. dollar, and it's up here at 20, 22-year highs. And I just don't see our Federal Reserve taking the approach of lowering interest rates anytime soon. I think actually we're going to continue to increase interest rates, and that, to me, will keep the dollar strong. And you look historically on a currency, when a currency makes a move, they tend to trend for a long time. So I think, in my opinion, a strong U.S. dollar is here to stay for the next, I would say, next couple of years. So, it's a big deal because Ukraine, Russia, major player, obviously, in the wheat market, and it's going to be just one more competitor that we did not need. So, it's going to definitely affect us into the 23 year.
Okay. Joel in Iowa asks, what is the outlook for next year's crop mix with some modest drops in fertilizer prices and fuel? Does planting corn make more sense than soybeans, even with the change in demand for both crops?
I think we still have some time to figure that out. Mostly, at least the guys in the central part of the Corn Belt, they're kind of tied into their rotation. They don't really alter too much from that. I think this winter could be big. I mean, we've had a report out that Brazil, one of the big analysts was out later this week here with an estimate that, Brazil could see an uptick of 20% more beans compared to last year. Obviously, we don't know what the weather's going to be here this winter, or this summer down in Brazil, but they are expanding. They're in expansion mode. They've been in expansion mode here for the last 20 years. And with these high prices, they are not going to slow down their expansion. So I think there could be more competition on the bean side. And then you have, the gorilla in the room is, what is China going to do? I mean, is China slowing down? Is their economy slowing down? Are they going to need as many beans? Their hog herd has picked up, but that's been in a mess here for the last year. So I would lean corn here right now, but I think it's something that we got to revisit down the road here in the next 6 months or so.
All right, you talked in the main segment about the cattle on feed report just a little bit. The headline really was that the cattle on feed, the inventory was 1% above last year, but placements 2% down. Explain that.
So we've had this supply that we're trying to work through, and it's all related to the pandemic, and then obviously the continued dryness, severe drought in the Southwest. And it's awfully hard to raise cattle with no grass, and that's simply what it comes down to. So you've seen producers in many locations throw in the towel and just sell all their calves and sell all their cows. So that's what we're seeing. That's why we're seeing the higher on-feed numbers compared to last year. But the placements are coming down. Now, the placements were a little higher than expected, but, again, we're sitting here middle of July, third week of July. It's typically the weakest demand time period of the year. This cattle market is setting up to have multiple years of good prices as long as the economy doesn't fall out of bed. So continue to watch that stock market if you're a cattle producer.
Okay. You mentioned this earlier that the EU has raised its rates for the first time in about 11 years, I think. Is that what you said? And the Fed is meeting next week to possibly do the same here. So does this mean that a recession is closer than we think?
I look at, my main street, it doesn't feel like a recession. I think there's some warnings out there with home sales. It's definitely slowing. There's no question that it's slowing down. You look at gas demand compared to last year, we're way below last year gas demand. So high prices are definitely taking effect. And eventually, people have to make choices. The free money and all the printing of money from the Federal Reserve looks like it's coming to an end here. So it feels like we're going there. We'll see what the Fed can do to slow this economy down. They're trying to slow it down. But a recession would be good for nobody. So hopefully we can get through it.
All right, and one last quick question. What do you think about gas prices? Are they going to, they've come down just a little bit. Do you think they'll go down even farther? Or are we going to see it go back up again?
I think, we're coming into the end of the summer. I think we've hit our peak. Again, I think it's going to come down to what happens here in the world, especially on the crude prices. But the shine has been taken off a lot of these commodities, and crude kind of rules the house in these commodities. A lot of the commodities follow their direction. So, it feels like it has. Now, if we get crude above, that 102, 105 area, I might have a little bit of a different opinion, but I would look for lower gas prices. Simple,
Okay.
quick answer.
I like that answer. It's a good answer. All right. Thanks, Jeff, for joining us for Market Plus. All right. Next week, we look at the battle over capturing greenhouse gases in the Midwest, and Mark Gold will join us to analyze the markets. Thanks for watching and have a great week.